Hello everyone. I hope you are all are doing great and you have a wonderful start of this spring semester. My name is Mohammad Nuzrul Islam and I am a TA of this financial statement course. And I am aiming to make some videos on several topics of this course throughout the semester. And the topics you have already been gone through the classes. And the purpose of this video is just to help you understand the practice questions step by step, and I hope it will help you before uh, taking the preparation of your exam. All right, let's start our first question, and we're going to solve it together. Okay, so the first question is asking what acquisition cost of this truck should United Van Lines record in its accounting records, right? We have to figure out the actual amount that we need to uh, record in accounting records. So we need to recognize the expenses or the income we have for this year. All right, let's read together. United Van Lines purchased a truck with a list price of 250,000, subject to a 6% discount if paid within the 30 days, and they paid within this discount period. So we are having this discount opportunity. All right. And then it paid 4,000 to obtain title of the truck. So this is another expense for the truck. And it paid 1,500 to pay the firm's name on the truck and 2,500 for property and liability insurance for the first year. So the question is whether we are going to consider all this expense here, or we have to be specific for recording the expenses. All right, for the acquisition for that particular day, for make the truck ready, we need to consider the expense, which is very important and which is mandatory to make the truck ready. So our list price, 250,000. This is a mandatory price, right? So let's do it here. Uh, so we can just wait a minute, and the all right. So our list price is the all right, and then we have a 6% discount period window. So we are getting the discount for 6%. So 15,000, and we have the discount period like we it paid 4,000 for the title. So another expense is title, sorry, 4,000 here we just, and 1,500 to paint the firm's name. So for the name, so 1,500, and you can see here like 2,500 for the property and liability insurance. This is not your mandatory expense to make the truck ready, right? But this is the cost for the whole year. So we are not gonna include this cost to make the acquisition cost for the accounting record. So other than this expense, all other expenses we need to incur to make this truck ready. So the actual acquisition expense would be our list price, and we got discount, so we subtract the discount value, and then we have expense for title and we have expense for the name. So overall it's 24, uh like 240,000 and 500 is the main acquisition cost for the accounting record. So instead of recording uh, to 250,000, we are going to record 240,000 and 500 to the accounting book. All right, let's move to the question 2. Assume Boeing sold a 767 aircraft to American Airlines on January 1st. The sale agreement required American Airlines to pay 10 million on December 31st of each year for 20 years. All right, so we have the number of years 20, we have annual payment 10 million, and we have 8% for the interest rate. Compute the present value of the receivable on Boeing's books on January 1. So the sales occurred on January 1, 2016, and you have to find the present value for January 1, 2016. So this is basically computing the present value, right? For the for this amount. So calculating present value, we need uh, number of year, we need the interest rate and the payment, annual payment. Thus we can solve our present value, right? So in the Excel sheet, you can let's start again. If you go to if you want to make present value, future value, or other type of formula, there is a option in Excel. You just go to financials and find present value. So now you found function arguments. Here you can just input all the information you have in your hand to calculate the present value. So in our case, the rate is 8%, and the number of year 20, and the payment is 10 million. Okay, all right. So the rate is 0.08, the 8%, and the number of year is 20, and the payment is 10 million, and thus we have 98 181. You see, so this value is basically the present value for these receivables. So you can use your financial calculator, you can use Excel just to solve the PV. It's very easy. Just go to the financials, click on if you want to make present value, NPV, future value, all the things are here. You just click there. For our case, we calculated present value. So you get the dialog box, and then you can just input your information, and thus you get the present value for this. All right. So the next argument is compute the present value receivable on Boeing's book on December 31st. So the date is very important for this type of math. You can see that the previous one, we have January 1, 2016, but this one December 31st, 2016. So this is 1 year ahead, right? So here we have when we calculate on the date of December 31st, we need to calculate the from the beginning balance of January 1. So if you already calculated on the first part, you can just start from the beginning balance from the January 1. Or if you have to start from this part, you have to first calculate the present value from for the January 1. We have already calculated this value. So over the year, you have what you have to do, you have to just pay the 8% interest rate for that particular year, right? So we just include that 8% with the beginning balance, and by the adjustment of this interest, uh, you have the value, and then you get 10 million every year as a payment. So you just subtract it, and then you get the ending balance for the receivables on December 31st. So this is true for like all the following years. I mean, if you go for December 31st, 2017, you can see in our next part, you just start from the your beginning balance, which is like December 31st, 2016. So the important part is from where you start. Like if you start from here, so you need to calculate the present value from the 2016 January 1, and then you have to adjust all the interest for that for these 2 years. And if you have started from A, B, C, then you have all the values, right? You have January 1, 2016, and then we calculated this value, and you for the interest rate for the second year, you just adjust that 8%. So the only changing part is your beginning balance from where you start. So that beginning balance, and then you just adjust the interest rate for over that year, and every year you have the payment 10 million, so you have to just subtract that amount to get the ending balance. So for the 20 years you can just go each year and adjust the interest rate with the beginning balance, and then you just get the ending balance of that receivables. So I hope it helps you a lot to understand the computing present value, and also how to recognize the expenses. So if still you have any concern or any question or any feedback, feel free to reach me. Uh, my email address is isl15228. I would be happy to answer all your concern. Thank you.